and we can start understanding some different elements outside of just the strategy, etc. That's going to allow us to improve our results, okay, and improve the things that we're doing. Now, there's going to be a few things that you know, there's going to be a few things that you do not know, all right, or maybe you know but you just don't use, and I think you should use. All right. Firstly, the obvious one is going to be our cashback forex. Anybody know what our cashback forex is being used for? Anybody know what we use this for? Why it's an essential tool? Anybody know? Well, it's an essential.
Lot size calculator.
Lot size calculator, right? So I'm going to pop this here. I'm going to put it in our spreadsheet, but I'm also going to put it in a chat for anybody who doesn't know how to get to this lot size calculator. I'm going to push it in at the chat. I'll find chat to everybody. All right. So lot size calculator, all right? Lot size calculator is essential. All right, if you're taking any trades in the market, you need to know how big your lot size is. What does that mean? It's how big a size position you're putting on. Okay, so say for argument's sake, have a look here. If I've got $100,000 account, that's what this is saying here, 100,000, and I'm trading in, for example, let me use a forex pair. All right, running to see GBP USD. I've got $100,000 account, and I want to risk $100. Okay, out of my $100,000 account, and I want that $100 to be spread out over 10 pips. So if the market goes 10 pips against me and I'm minus $100, it's saying stop me out, close my trade and let me only risk this amount of money. This is essential in our risk management journey. We must understand how we can, manage our risk. So here is the pips. So as soon as you come in here, what you're going to need to do is you need to click this where it says stop loss in pips and switch. You can see you hover over it and it says switch, because when it comes like this. It comes as stop loss in price. Now you don't want that. You don't want to be here trying to draw in the price and all of these numbers. That's long. You want to click in here, make it stop loss in pips, and therefore when you measure out how many pips, to where you want to put your stop loss, you're going to put it in. So if it was 10 pips, and I only wanted to risk $100, which is 0.1% risk of my 100K account. When I hit calculate, it comes out with a lot size of 1. So one lot over the duration of 10 pips. So if the price starts going against me, 10 pips against me, I'd lose $100. If, for example, that lot size was 20 pips and I hit calculate, well, I'd have to be half that size, right? 0.5, still risking the same amount. You see, this is a fixed risk. If for whatever reason I found an amazing trade and it was only 2 pips, well, my lot size could be 5, yeah, meaning that over those 2 pips I would lose $100 if the trade went against me. I'm capping my risk over here. This is some baby food. This is the basics. Okay, you guys understand. That's the first thing. If you're not using your lot size calculator, I use this one. There's many different ones. But if you're not using your lot size calculators, you are gambling. Yeah, you're a gambler. Yeah, I'm sorry to tell you, you are a gambler if you're not using it. If you're just saying, yeah, I just normally keep it at 0.1, 0.5, you're gambling, because it changes from pair to pair. I've got GBP USD in here, but if I had US 30 or gold in here or EJ, it would be something completely different. Okay, all right, so you must use your lot size calculator. Any questions about lot size calculator? Anybody got any questions about using it, don't understand how to use it, have any issues? Anybody? Good. All right, we all understand this. All right, the next thing is going to be our trading view. Now, though we use it, we don't use it. I'm sure you use it, but you don't use it. I mean, you use some of the lines, you know how to change the pairs. Maybe you've got some things up here. All right, now first and foremost, when it comes to, say, for example, your time frames, yeah, you see over here when you got the drop down, you can favorite different time frames. Maybe you know this, maybe you don't know this. You see these little stars here? Look, you see where it says 5 seconds? If I uncheck that, it removes from my little list up here. If I check it, it's in my little list up here. Now, you might not be able to see the seconds because maybe you don't pay for your trading view. I pay for my trading view. So I got a feeling that people that don't pay and using the free version, I got a feeling it stops at the minutes. Yeah, if I remember correctly. Okay, but I can star whichever time frames are interesting to me. If I don't want 12 hours or 12 months, I can get rid of that. If I do want 12 months, it's there. All right, can you see it moving, things jumping in and out of here? Look, 1 month jumping in and out. Yeah, 4 hours, removing it, adding it. It's very important that you create your own little setup, personalized to you and what you want to see. I want to see all of these time frames, so I have them in there. You don't necessarily need to see these seconds. For most people, you don't need to see these seconds time frames. I use them when I'm trying to see something that I can't see on a 1 second time frame. For other people, you don't even necessarily need some of these smaller time frames, but you definitely will need, the ones that you definitely need. And we're going to go here so first and foremost, we're going to put in here cashback forex lot size calculator. All right, we're going to put that in there because it is essential. All right, this is going to be a little kind of hodgepodge of hacks we need. All right, that I think that every trader should have, or at least understand the value of using them or having them. All right, so cashback forex is our lot size calculator. All right, this is for managing our risk, as we all already know. Okay, secondly, customized trading view by favoriting favorite items. This is something you can build for yourself. Your trading view can be dark theme, it can be light theme. You can change this here from dark to light if you want. Here, watch your eyes. You ready? Jang. Yeah, if that's what you want to see. If you want to see it bright like that, I don't. It's a little bit hard on the eyes for me. I keep everything dark. Yeah, always bet on black, so everything stays dark for me. And it's easier on my eye. Now you can also customize this panel here. So this panel here is we get these things from over here in our side. I'm teaching somebody to suck eggs. I know a lot of people already know this, but I'm just going over it just in case you don't. So when you go in here, whatever you want to see as a customized panel, you favorite it. You'll click these little stars and have a look. If I click this star over here, you'll see my highlighter tool disappear from it, add to it, disappear, add, disappear, add. These are my own little custom panels, things that I use. There are things that don't need to be in here, for argument's sake. Let's go and have a look in here. I can see a volume profile, little indicator. You see over here? I can get rid of that. Yeah, because you want to keep things as clean as possible, but you want to keep them relevant. Things that you use. If you don't use certain things, don't put them in there. Now I know you're saying I don't know what I use. Fair enough. If you don't know what you use, that's okay. However, you can copy me. All right, for now. Yeah, and then you can build up your own, custom panel of what you use and what you use more frequently. So for example, I'm putting these into an order of things that I use more frequently from right to left. I use these probably in this order. My long position and short position is something that's quite important to me. Yeah, I put them all in here so they are at my fingertips for me to be able to use my fib extension tool. I don't necessarily use the Elliott wave retracement tool and stuff. I could remove these, but anyway, that's how you customize this panel, and you can customize across the board. All right, now another thing that we do is you can have a watch list. All right, you can create watch lists. All right, so what does that mean? That means you only trade a certain couple pairs, for example, and you can go in here in this right panel, this first one over here, and you can create a watch list. So say for argument's sake, I can come in here, create this little arrow, go to create new list, and I could call this, daily pairs. All right, click save. Now I have something in here called daily pairs. So say for argument's sake, I trade GBP USD here. I can right click this screen. All right, and I can add GBP USD to whatever watch list I want, i.e. daily pairs. All right, let's say I trade US 30. I can right click US 30. I can go into here, add to watch list, include it in my daily pairs. Can you see them added in here? All right, and I can do that for the ones that I like. So I don't need to be flicking through every single morning going crazy. What have I missed? What have I not missed? I can go in here and I can add them. You see, imagine I want to go in here. I also want to look at EJ. Euro JPY. Okay. What do I do when the pair opens up? Well, I can do it another way from there, but this is good for now. I right click, add to my watch list, add to my daily pairs. Okay. This is very important. This is about making you more efficient, and it's going to allow you to navigate these pairs in a much more efficient way. Okay, because now your day, whatever that may be, maybe you're missing some, maybe somebody in here likes to look at gold, XAU USD. All right, you're going to go in XAU USD, you're going to click onto it. Yeah, you're going to right click anywhere in that gold screen as soon as it loads, whenever it feels like doing so, and you're going to add to your daily pairs. I'm building up a list over here. I'm building up a list of my pairs. Now let me turn your eyes to this list. You're going to see some stuff going on in this list. Do not let it scare you. You see, prior to you coming to trading, when you used to see all this happening and it twitching and flashing and lines and zigzags, you're just like, oh, this is a madness. I don't know what's going on. It's not a madness. Yeah, let's get clarity out of confusion. Yeah, this is just showing you last price, showing you change and the percentage change. Yeah. Now you can edit these things out depending on what you want to see, but we don't really care about this. Let me tell you what this can immediately allow you to see. Is if you had lots of pairs up, it can immediately allow you to see where there's some volume. The one that's going mad and flicking and flashing and whatever it may be. Well, in there's some activity happening. Yeah, and it's the absolute same thing in regards to your MT5, all right, or your MT4. If you had your MT5 or your MT4, have a look here, and you had a watch list, your market watch, all right, you get that by going to view, and then you go to market watch on your MT5. It's the same. This is the same as this. It's the same thing. It's MT5's version. Yeah, it's just showing you the pairs. Are they going bullish? Are they going bearish? Can you see these little arrows that keep changing? AUD's going up, then it's going down, it's going up, it's going down, and you can see whichever's flashing the most is showing you, where there's a lot of volume, like around 2:30, around New York Open, etc. You see them just blinking, because there's volume in the market. Lots of orders, lots of things happening. And spread. This is coming from your broker. Now, this is not 12 pips, it is 12 points. Yeah? So this is like 1.1 pip as a spread. So when you hear me say spread times 2, if you was in AUD CAD and I said make sure your spread times 2 above your high, well, here you're going to be 2.2 pips above the high. Okay? Here you're going to be 1.3 pips above the high. Okay? All right, it's exactly the same principle. Now, when we've built up our list, these are all little hacks. So we're going to add this in here as well, guys, because we're doing this ad hoc. All right? We're going to say build your personal watch list in TradingView. Yeah, I apologize for the capital letters, but I just can't be bothered. It is what it is. All right, build your personal watch list of the pairs that you look at. If this is 50 pairs, build this out for 50 pairs. If you want to put them in alphabetical order, you can click this to sort them in alphabetical order. All right, etc., etc. Okay, very important. I've got lots of different lists. I've got one that's called Big Boys. Yeah, pause. Yeah, Big Boys. Yeah, these are markets that move a lot. All right, we've got our Bitcoins, our DAX, our NAS, our SPX, US 30s, gold. These are markets that are quite volatile, move a lot. Yeah, I've got various different pairs and sometimes I've deleted them. Let me show you another little hack people don't know about. You can go into TradingView and you can go to open your list. Yeah, and you can actually go to hot lists. Yeah, and they give you some defaults. Yeah, they will give you some defaults. Now, it's not that relevant in regards to Forex. Like they seem to lean more towards other pairs, but you can go to see which markets have the biggest volume change. You can go and see which markets have the biggest gaps. We understand markets don't like gaps, doesn't matter what markets they are. Yeah, doesn't matter what markets they are, they don't like gaps. And have a look, I can just click this, gap gainers, and yeah, it's showing me some stocks here. But look at this, if I click this one here, NGNE, don't know what it is, it's Neurogene Inc. If I click it, let's go to our daily time frame. If I click it, this is showing me ones that have large gaps. Let's have a look. All right, oh sorry, these are the gap gainers. All right, look at this gap that formed in here. All right, now let's say for argument's sake, let me go back in here, open a list. if we wanted to trade, closures of gaps. Look, this market gapped like this. Let's imagine, for argument's sake, we was interested in trading this IRON. Yeah, iron is a symbol for Disc Medicine Inc., which we're not trading the stocks. But the whole point is, trading views just let us know there's been a big gap. And we might have been trying to buy this market to close the gap. Can you see? It's helping us. We've got to use the tech. We've got to use the tools that are available to us. All right? So maybe you didn't know that. I don't know. Maybe I'm teaching somebody to suck eggs, but maybe you didn't know that there was all these different little presets as well as your own watch lists that you've created in here. Now let me show you another thing. We're going to get a little bit more to some other little areas that may assist you more. Right. We understand about outside and inside candles. Now let me show you how right now there is US elections, and we can understand that the markets are just chilling, just waiting to see Hua Guan. Yeah, literally they're like, listen, we don't know what's going on. We are totally chilling. What's going on up here? We're chilling. We're waiting to see what's going to happen in our US elections. Okay, because every single one of these markets, if I go to my daily here, we're going to click AEDJP. I'm going to go through this list. This is just my big boy list. Okay, there are no outside candles in any pair. Any forex pair across the market, we have no outside candle, no bias. Yeah, at the moment. Have a look. This is our daily, and this is how I'm able to zap through. I could do 50 pairs in 5 minutes. Just not the be all and end all, but at least I can start with the bias of, do we have any outside or outside candle movements in bearish or bullish directions? Okay, so have a look. I can start here in ADJPY. No. Bitcoin. No. DAX. No. It stays on daily, and I'm flicking through. Yeah, I'm looking for the previous candle. Is it closed above or below the range of the candle before it? No, I can slam through these in no time. Man, let me show you how you use this tool properly. Let's imagine I find one. Yeah, I say this is NAS on a daily time frame, and we've seen a big outside green candle here. I did say that there was no pair to find one, but here we go. NAS. All right, sorry. It's a mistake. I've rewound this, all right, because I was looking at this to make an example. Yeah, so for argument's sake, this is NAS. This is not today's date, I don't believe. No, it's not. It's August. All right. Now, let's imagine that we turned around and I've seen that this is an outside candle. I was looking at this the day before. What you do is you go into your symbol list here. Can you see this there's a little bookmark thing on the left hand side. Yeah, guys, give me some energy and some feedback if you're alive and you can see what I'm talking about. Let's make it today a nice, energetic session. Can you see these little bookmark things that keep coming up, these little grey bookmarks? You see them? You see them?
I can see them, bro.
All right. So good morning, my brother. When you're blasting through the charts, watch this.
Bro.
Watch. What have I done? What have I done to NAS as I'm just doing my research, doing my due diligence, having a look through the pairs? I've just clicked NAS and I've been put a little green symbol here, letting me know it's been an outside candle. Yeah, letting me know that that's this. Obviously, I've gone one candle too far, but letting me know that, or if I can go back, I haven't gone one candle too far. That it's been an outside candle. Okay, and that's how you're able to do your due diligence. You might do it on a Sunday, you might do it in the morning. Very quickly, watch. I can go to SPX, have a look. All right, now these, I've rewound these. That's why these markets are looking a bit mad. This isn't the case right now. I've rewound these. I just want to show you guys something here. But I'm able to go, okay, yep, SPX, boom, like that. If it was a bearish candle, watch. I'm able to click in here. So straight away, visually, I know what pairs I'm going to be looking at today. You see in the morning when I write up here what I'm looking at, it's because I blasted through these so fast, I'm able to go and, understand, okay, this pair is doing this pair is doing that. All right. Like I said, all of these markets have been rewound at the moment. All right, so they're not valid. Yeah, as in they're not present. I've got the rewound tool on it. Yeah, I'm gonna do some back testing to show you guys. All right. So if we go to gold, I'm able to blast through straight away, and whatever decision. Obviously, other things I leave blank, so I don't care. But say for example, I looked in here and I was like, okay, yeah, boom, outside candle. Now, we know that's not the be all and end all, but I've at least I've narrowed my list down. This is very important little hack if you want to understand how you can blast through your pairs and keep an eye on what's going on. So then afterwards, I've done that now, I can come back over here and go, okay, Nas. All right. So let's go for another hack. So the other hack is this, as it's not a hack, but another area of confluence, something we can add, is that we understand this outside candle principle. So in this instance, just the fact of us turning around and saying that this is an outside candle here, it's not the be all and end all. I still got to know where we are in the range, all right? So what I'll add in this is draw your trend lines, yeah? So let's go back to our little list over here, build your personal watch list, flag pairs which are bullish or bearish based upon inside outside candles. I will rewrite this better because writing it all in capitals looks mad, I know, but that's what it is. All right, flag them. Also keep it basic, draw your trend lines. I don't care anybody tells me about trend lines, draw your trend lines, yeah, as in know where you are in the range, yeah, as in premium or discount. This is I do a lot on this, all right, very, very basic. It's a basic, but it's fundamental to understand. Are you cheap or are you expensive? We do it in other walks of life. When you go to Tesco's, whether bread is cheap or expensive. Like if you go and man said, yeah, it's £8 for the loaf of bread that you bought yesterday, you're gonna be like, what? You're not gonna be in a hurry to go and buy loaves of bread at £8 a pop. You're gonna be like, right, that's mad expensive. Furthermore, I've got some bread in my house. I might as well stand outside of Tesco's and sell my bread for £8 because I only paid 80 pence for them last week or 2 days ago. So whether you are high in a range. You see, up here, you'd be expensive within this orange range. Okay? You'd be in the middle of a bigger range, but you'd be expensive within this orange range. So if for whatever reason you had to buy bread, you'd want to buy it down here, right? When it was in a discount, when it was cheaper. Yeah? You can't buy down here because today is here. So unless you've got a time machine where you can go back 3 weeks and buy bread cheaper, you can't buy at this little place here. So unfortunately, this, you don't have the option to buy there. You don't want to buy up here because it's expensive, most expensive you've ever seen, £8 bread. And you come down here, and here bread is £2. It's more expensive than the 80 pence it was in March, but it's cheaper than the £8 it was over here. So this is where you want to buy it, in a discount. We understand this. This is fundamentals. Yeah, this is basics. Yeah, but people say that, but yeah, I see them taking a trade and man are out here buying in a premium or selling in a discount. Now, of course, markets can turn around. Of course, there can be momentum trades. But ultimately, these are the fundamentals, the basics. Let's strip this down. Let's get basics for our hacks. Okay, now, let's go and look at this for example. Here, the market, even here, you can see we are quite high to middle of a range, of a bigger range. But as a day trader, though we are wary of that, it's not the end of the world because we're trying to get in and out of the market in a day. All right. So let's have a look here for argument's sake. This is our Nas daily outside candle. Look, it hasn't made no outside daily candles previously. Here was kind of in line with this previous wick. Wasn't really outside the range of this red candle here on Wednesday the 7th of August. Then the next candle here, this green one, it wicked up here, it came back, wasn't really outside the range of the previous candle. And then this candle here came up here, look, it made a little doji, wasn't outside of the range, didn't close, it's about where the candles close, all right? So this brings us to understanding candles. Understand that a bullish candle opens bottom left. Okay, it's not going to let me draw on the bottom left because it's snapping to a place. A bullish candle opens bottom left of the body and closes top right of the body. A bearish candle opens top left of the body and closes bottom right of the body. The wicks show the journey within that time frame. So the market went up here, but closed in this little corner here. This closing price was here. If we hover over a candle, and you probably never seen this before and never understood this, but I'm giving you all the source. Maybe I'm telling some, maybe you already know. If I hover over the candle, can you see this text up here that's moving? Can you see it? As I go over different candles, it's changing. Can you see? Can you see? Can you see? Those numbers there ain't there just for decoration. Yeah? I know that you've never paid attention to them ever before, but they're not just for decoration. It's showing me the close. Look, if you look up here, it says OHLC. Can anybody take a stab at what all of those letters stand for? Let's go. What does O stand for?
Open.
And what does H stand for?
The high.
Keep going, L.
Low.
The low.
And C.
Close.
Exactly. So as we hover over these candles, we can see where they open, where the high was. So the high is the top of this wick, the low is the bottom of this wick, and the close in this bearish candle is the bottom right hand corner of the candle, or the bottom of this candle. I like to say bottom right hand corner, the bottom of this candle where it closed. If we look across there, it says approximately on that close, if you look right where my little crosshairs are, can you see that number says 18849.6, kind of around there. I'm talking about over here in price. All right, and if we can see over this candle roughly, if you go where it says C, it's about 18.848. It says 0.9 there because it's slightly off. I was slightly off, but that's what it's showing us. Now look at this outside candle. This is the first outside candle. Now this is not the be all and end all. This is just part of our little hack medley for us to become more profitable, to help us make our decisions in our trading. Yesterday I said to you guys, not really nothing too great in the markets. Yeah. Why did I say that straight away? Because I like to see outside candles, me. I like to see candles pushing in a direction with some momentum. It gives me a setup, as well as the other things we know in regards to session highs and liquidity, which is all part of our strategy, and our strategy is becoming more and more robust and adding more and more things that are going to help new traders and people to become profitable. That's what's so amazing for your journey, yeah, because we're adding to what we know. Yeah, so right here, this candle closed up here as an outside candle. Now this is one confluence that means that maybe the next candle is going to be bullish, maybe, but it's an edge. It's giving us an insight that there's more bullish momentum. Okay, so if we think that the next candle is going to be a big green candle, bigger than this green candle, or closing higher than this green candle, I'm going to put a line in here. Any entry, yeah, bearing in mind this candle closed up here, this green candle, any entry for the buy below this where the last candle closed, below here for the buy, because it's going to be a good entry. We say that one more time. This green outside candle, meaning it closed outside the range of the previous candle, gives us an insight that maybe, it gives us a slight edge that the next candle is also going to be green. It doesn't happen every single time. It isn't a foregone conclusion. Yeah. So therefore, you see this imbalance that's formed from this big push up here. The next candle that's going to be opening on Wednesday, the 14th of August. Any entry below this yellow line where the candle's going to open, because look, it closed over here, so the next candle should open up here. Any entry down here for the buy will be a good entry. Let's click next. So any entry below the open of the candle, i.e. down here, anywhere in this wick, which happened to come to 50% of the imbalance, would have been a good trade for that day because the market closed back up here. All right, let me say that one more time because I'm looking at this this is on the daily time frame. This is just one part of our confluence. This has told me that today I either want to sell into this retracement as it closes the imbalance, which is a bit more advanced, or I want to buy at some point below the open of this candle. And this candle here, even though it's a small little midge candle, did close ever so slightly above, outside the range of this candle. Now, I'm not trying to say that's the only distance. Well, if you got a trade from down here, remember, I'm looking at the daily time frame. This is a huge distance. From down here on this wick all the way up to where the candle closed. And even if we want to go to where the candle's high was, let's have a look where the candle's high was about here. It's 276 pips. It's not a joke. It's not a rubbish trade for the day. It's a big trade if you're able to catch it down here. Now, how we catch it down there obviously isn't just looking at our daily candles and hitting buy. We're still going to drop our time frame. We're still going to look for where liquidity is taken. We're still going to look for that breaker structure or manipulation. But at least in the back of our brain, we're thinking to ourselves, if we get any type of entry below that yellow line, I'm getting in for the buy. You see how we're able to now help our bias on what we want to do for the day. Yeah, let's look at the next candle and have a look, because this candle did also close ever so slightly outside here. Let's look at the next candle, see what happens. Oh, jeez. Yeah, nice big candle. So once again, even if we wanted to go here, look, once again, it's the same principle. Yes, it's on a smaller time frame, but we would have seen this as an outside candle, even though it wasn't the most compelling. I'm not going to lie to you. This wasn't the nice big green candle that I want to see. But if we're thinking to ourselves that there's that bullish momentum, yes, we can see this imbalance is a concern. But there's no imbalance there, because this wick came all the way down to here. There's an imbalance a little bit lower. But any entry below the open or below the close of this previous candle, i.e. below, all this wick is below the close, okay, even closed up a little bit of, some little gap energy in here, would be a good entry for the buy. And this market's gone all the way up in here. Now we've got a big imbalance in here that we understand the markets don't like. So this is where we get a little bit more advanced. We could either in this situation say, look, we're interested in, depending on where we are on a smaller time frame, selling, yeah, in the early parts of the day on the basis that maybe by the end of the day, this is going to be another green candle because of this outside candle above here. Now, like I said, this is not a foregone conclusion. At some point, this must end. And we must get an inside candle or maybe even a bearish red candle. But it's one element you can add to your trading to help your bias. Let me see. I don't know what's going to happen. But I know that there's an opportunity here to sell into this imbalance. Yeah. Close in this imbalance energy. And potentially, when on a smaller time frame that we can't see right now because we're looking at it on a daily, to get a lovely entry for the buyer to possibly get a candle that closes above the high of the previous day. Let me show you what else this does, which somebody doesn't understand and hasn't clocked yet. This gives you a clear target for a longer entry. Because if I was to get in at a close, let's say for example, here, if I was to get in here, down here, when I said to you this is an outside candle here, anything below here, a target would be the previous high of the last candle, because I'm expecting to see a green candle bigger than that candle. That is a first target, that it at least breaches the previous high of the candle. Yeah, just like if I got in somehow down here, it's a bit of a small silly little doji candle, but this breach of the high of that previous candle is another point of interest. Obviously this candle completely blew through it. Let's see what happens on the next candle, because this is a big outside candle. Let's see. Once again, like I said, any entry below the close of that bullish candle, bearing in mind we had that outside candle. So for example, down in here, yeah, any entry below that yellow line would be a good entry for a buy. Now that doesn't mean you just hit anywhere. We still have to look on a smaller time frame, which gives us, oh yeah, here is a great entry. We've just seen liquidity taken, it's broken structure, we're within our kill zone time, we're going to be buying. But where would be a target? Look what I just said to you. A great target, first and foremost, would be the high of that previous day. Yeah, over here. Now don't get it twisted. From down here this wick to that high is 160 pips. Okay, now I'm looking at this on a bigger picture. We're only in a daily. I'm not trying to say you can take this trade just by hitting the button, but I'm saying that is the first bit of confluence, the first bit of due diligence that you can do to give you a bias. Is everybody following me so far? Is everybody following what I'm saying so far to help you in your trade?
Bro. Absolutely.
Yeah, 100%.
So I've already shown you now some hacks First of all, boom, I'm coming to this market, boom, I'm in here. I'm going through these, I'm blasting through my pairs in seconds. Because all I'm looking at is there any outside candles or inside candles? Does that mean that I can't take great trades elsewhere where there's no outside or inside candle? Yes, I can. But I have to filter this somehow, isn't it? I've got to go through some sort of filtration process. Yeah? So therefore, first and foremost, I'm going to blast through here. Okay, yep, outside candle. Oh yeah, outside red candle, bearish. Okay, mark them all up. Then I've shortlisted them. Even in this filter allows you, look, when you go into open your list, allows you to see which ones are just red, which ones are just green. So if you said, you know what, I'm a man, I just like to short pairs, or I just want to short pairs today, or there's US elections and I'm thinking it's going to be this, that, and other, just look at all the ones that are green. Look, it's just filtered it for me. So now all of these are just buys. I'm only buying these pairs. Or if you are advanced enough, you can sell into the buy. That is the next step. You can sell into the level because you might be right at the top of a range. Let me get to that step now. On a smaller time frame, when we start dropping down our time frames, okay, we understand that what drives daily movements is liquidity. So if, for example, let's go back to, let me tell you what, let's do this in real life. Or not in real life, let's do this based upon this candle over here. All right, we're gonna, we're gonna rewind all the way over here. Okay, so our previous candle, we've looked at this. By the end of the day before, we've seen this has been a big outside green candle. We'd know that by early yesterday. We'd know that by, look, this candle is going to close up here. It's going to be an outside candle. We know that by the day previous. Okay, so we're coming to the market, thinking to ourselves, now's 100. Tomorrow is probably going to be a bullish candle, but there's quite a big imbalance. Anything we get, any entry that we can get below the open would be a good entry. All right, we're going to drop our time frame down. Let's just quickly jump straight into an hour. I don't want it to take all day, and we've got I'm going to put an indicator on here at the moment, which is just going to show us the days. All right, so let's go back to my daily over here. Let's understand that this is Tuesday, and we're interested in seeing what's going on on the next day, on a Wednesday. All right, so we drop our time frame down to 1 hour, just for argument's sake, just to get it done quickly. Let's get this out of the way. Let me make this full screen as well, so we can see as much real estate as possible. All right, so this is Tuesday. This line here, can you see the line stop when this is Tuesday? I don't even know why the line's actually there. 1 hour. All right, not sure what that's saying like that. Okay, let's go to the next day. Let's keep scooting this forward. All right, so this isn't working properly. 1, 2, 3, because this is moving very quickly. Oh no, let's see anyway. So this is Wednesday now. All right, so on our daily time frame, if we go back, we said, let's put a little yellow line in here, make it nice and solid, that we're interested in anything below that yellow line as an entry. All right, for the buy. All right, come on. Yeah, anywhere below that yellow line for the buy. So if we dropped our time frame down, we go to our 4 hour, and we can go down to our hours. Let's go to our hour. All right. So we can see a couple things happening. All right. So if we was to rewind now, all right, it's gonna go rewind a little piece. We're here. All right. So this is now Wednesday. We know that anything below this yellow line here, let's make it fixed so you guys can remember where we are. We're interested in a potential buy, all right? But we understand that because previously, let's go back to the daily, that big green candle, all right, left this big imbalance here, this gray box, all right? We understand that the markets don't like inefficiencies and it might want to come in here and close it. The only reason you keep seeing it jumping here, guys, is on the daily, it keeps snapping back to the whole day candle, all right? Let's go to an hour. All right, so now we're only hours into that day. Okay, and we can see here Asian session framing things. So if we're thinking to ourselves, there's a huge imbalance below, which is that gray, all of this gray box. Now it's Wednesday, and we're here. We are interested in where the liquidity is, and the market potentially taking liquidity before maybe pushing down and closing imbalance. Only to give us an opportunity to buy, because we've already said any buy position below this yellow line could be a good trade, but we're concerned about the imbalance below. Yeah, have a look. The market London starts now, pushes down, takes some liquidity from below. All right, let's clicking it. Pushes up, takes some liquidity from above here. Yeah, and pushes down here and goes and gets this liquidity. It takes the liquidity from down here below this. I'm on an hour, remember our strategy allows us to get in on the 1 minute time frame and smaller, but I'm just showing you that motion, because now what's happened is this market has pushed into this level and taken liquidity from down here. So if we identified this level as a great level where there's some liquidity, bearing in mind we said that the market could push into this gray box, yeah, and close up some imbalance. If we got what we needed here, we might have got an entry. If we got what we needed on a smaller time frame, yeah. I'm not going to drop down to the smaller time frame yet. I'm just showing you on a bigger picture on the hour time frame, hour candles. All right. The market is in here again. So here, even if we had got a great entry in here, would have been a good trade, because the market took liquidity from down here, pushed all the way up in here. Now we've seen a bearish candle. Okay, no problem. Let's click forward. Bearish candle. We're now 50% of that imbalance. Can you see this gray box? 50%. We're currently sitting in 50% of that gray box. I can see that by my eye. Yeah, but that's where we're sitting, and we're also sitting on a previous battlefield, which is this high, which is a London. You might not be able to see. Is a previous London, so New York, because New York is blue, session high over here. Previous battlefield we just tapped into. Now I'm going to be very interested to see if in here I get what I'm looking for, because it's 50% of the level. Look, if I go to my daily, this down here is 50% of this gray box, which is the imbalance. Yeah, which is the concern that we had even before this day started. The concern was this imbalance between the previous candle high, which is this wick, and where the candle opened, because it opened over here. So this imbalance was a concern, and we've seen the market come down and get to 50%. We have to, our alarm bells have to be ringing there. And on a smaller time frame, we're looking for an entry, or we're looking for some sort of confirmation to say, yeah, maybe we should get in now. But the market's sitting on a previous battlefield, which is a New York session high. And if we drop our time frame down, let me see. Let's try and do it live. Okay. Look, we've just taken this liquidity from here. Now we know we only want to take trades after what? When do we only want to take trades after something happens?
Liquidity.
When liquidity is taken. Once liquidity is taken, that's when we figure to ourselves, okay, it's party time. Liquidity has been taken. All right, not before. So we've seen the market come down here and take liquidity from below this New York PM session. I'm going to make this here a line saying liquidity taken. At this point in time, we are high alert. And we've seen it push all the way down here to a previous battlefield, which is this. I don't know if you can see. I can make it. Can you see this little blue box here? There's a blue box area here, which is New York AM session high. We've seen it stop in here. We've seen a wick rejection in here. That's on a 50-minute time frame. Trust me, there's a 5-minute and a 1-minute entry. Yeah, there is a 5-minute and a 1-minute entry. Yeah, but let's just see if we can get it. Here is it on a 5-minute time frame. We're looking for what we look for. Can we see what we're looking for on a 5-minute time frame? Can anybody see anything that's looking interesting? Can anybody see anything? Can see a big manipulation W in a 5-minute time frame. Now, if we was taking 5-minute trades, maybe this would be prepping us and getting us ready for some sort of tap back into these levels to get in for the buy. Maybe, yeah. Or alternatively, if we was a bit more aggressive, we might be turning around and saying, you know what, Jay? I'm down here on my 1-minute time frame because I'm sensitive to the markets and I can see things quickly. Let's see. I don't know. This isn't one I made earlier. This is one I'm doing this live. So let's see if we can see anything on 1-minute time frame. On a 1-minute time frame, I can't see a clean manipulation W here on the 1 minute. Let's check the 2-minute. Let's check the 3-minute. Let's check the 4-minute. 5-minute it is. Yeah, 5-minute it is. So at this point in time, we're looking for some sort of entry, and normally our entries, we're interested in the middle of our W, the break. I'm going to make it green. We're interested in that middle area. Are we going to get a tap back in here that we can either take the trade here, which is a more aggressive trade, or we can get a correction and then a continuation, which is a safer trade. Now this market has gone for it. It's tapped in here quite quickly and reacted. All right, let me just check this one more time because this is NAS, and NAS can be a little bit volatile. I don't know if it's going to give me 30 seconds, so I'm not going to bother. All right, we'll just go back to 5 minutes. All right, so we're going to see here, do we get an entry in this? Because it's possible that we don't get an entry. Yeah, it's not impossible that the market doesn't give us an entry, we don't get in a trade. But I can see right at this point when we broke this middle of the W, can somebody see what I can see? What can I see? Finish my sentence. What can I see right at that middle point of where that manipulation W was broken? My clue is I'm filling it in right now. What can I see right at this middle point of the W? If you can't see what that W looks like, I'm going to show you it again. There's the 5-minute W. It's bait. It's a manipulation W. What do I mean by manipulation W? I mean that a normal W is McDonald's. Yeah, like this. This is a normal W. Normal M, and this is a normal W. Sorry, yeah, it's a normal W. Yeah, like that. A manipulation W means that right shoulder is longer than the left on a W, and the same with an M. Okay, that's the manipulation M and manipulation W. So you can see here this manipulation W, and on the 5-minute time frame, I asked a question: what can you guys see if you look left or right from this middle point of where the middle of the W is? What can you see? It's not a hard question. What can you see? Go on.
Is it imbalance?
You can see an imbalance in there.
Yes.
Look, right at this point in here, we can see how the market pushed through that middle. Remember, this is structure. Forget about it being an M or a W. This is the last high before the lowest point. Now, if I was to draw a line in here, look. Computer's moving a bit slow. Look, if I was to draw a line in here, that's the last high before this lowest point, and the market pushed through here aggressively with strength and speed, leaving some imbalance in there. Now, hopefully this market comes and taps back into this kind of area, allowing us to potentially get an entry, and the safest entry, without us trying to be, get a 1,000,000-to-1 risk to reward ratio, that would be an entry, and our stop will be below the low. Now, I don't know if we get tapped in, but let's see. There's our end there. We've just been tapped in. All right. We've just been tapped in. Let's see what happens. Remember, this isn't one I made earlier. This is me doing it live. We could take an L. We could have egg on my face for all the people on YouTube to have a look and see. Yeah. But it doesn't matter, because I understand that this game that I'm in of trading is not about me predicting the future, being a clairvoyant. Yeah. It's about me being a great risk manager and using my edge. I said, let's just have a recap, that I had a big outside green candle over here. I said that the concern was the big grey imbalance, which I've marked as this grey box. I said that the market pushed down to 50%, which is always a place where I start saying, okay, 50% is good enough. That means you didn't get your price moved past this level very, very quickly, but the market gave participants an opportunity to get back in there to where the market was moving very quickly. Didn't close the imbalance complete, but 50% at that point in time, I got to prick my ears up. I've said that at that point in time, I'm looking for the things that I look for, which are manipulation breaks of structure, strength and speed, tapping into areas and points of interest that I see, which is an imbalance. I said I'm placing my stop below the low over here. I don't know if I'm going to take an L or not. I also said, which I didn't mark out, which I should have marked out the top of the candle, all right, to be able to see where that candle's going to go. But let's have a look and see what happens. And trust me, this isn't one I made earlier. I'm just me doing it live. I could take an L. All right, let's hit play. It's moving too slow for me. Let's make it quicker. Let's hit play. Still moving a little slow. Now, the only thing we haven't done here is this, okay? Is I'm going to quickly click back. I'm going to quickly click back to our look at this. It's running. It's doing great things. All right, stop. It's not stopping for some reason, no. Stop. All right. Now, obviously, this is a bigger trade. All right, but the point is like this, right? If we go back to our daily candle, this is the only thing we didn't do. Okay, is we were saying that this anything below here would be a great entry, which we didn't get the best of entries. But remember what we were saying where our target would have been. It's the only thing we didn't put in there. Yeah, our target would have been at least the high of that previous which one is it? Let me see. So this is now Thursday here. So Wednesday, this here would be at least, that target would have been at least the high of that previous candle, which is here, unfortunately. So if we got an entry around here to here, that blue line would at least been a target for the day. Obviously, we've seen that our market's actually run past that level. So now let's drop all the way back down. 15 minutes. And let's see what happened. Well, what happened is we got an entry in here, and it wasn't the greatest of trades in regards to a 5-minute entry that we took, because our first, well, I'm not saying it's not the greatest entry, but look, here at like a 1-to-1, we would have, this is breaking the high of the previous day. See? So this at this point in time, we'd be like, let's at least make this trade risk-free. Because we've actually, if the candle danced around here for the whole day and closed just above this level here, it would have confirmed our daily bias of another green candle. All right, let's hit play anyway, because now this is a longer trade now, and it's like we could have taken our profits. Yeah, we could have taken our profits straight away here. Yeah, as the market came and tapped in and pushed back up into these levels, we could have taken our profits and just said, we took a little 1-to-1 trade. Or if we got a better entry in here, which I do believe there is one, all right, then it would have been a lot more tasty trade of us saying, we got in somewhere down here and we took it to the top of that higher here. But in this instance, the market kept on pushing. Now let's look on the next day. Since I even look at the next day. All right, so that was a profitable trade. It wasn't huge, all right, because the day's now ended. That's the only reason why I'm saying it's not huge. If you held on to the trade, cool, but we don't want to live in hindsight. Okay, so let's go and look at this candle here. Let's look at this candle here. I'm showing you this one confluence play because it's helped my trading a lot. It's helped me decide what I want to do, and it's helped me look at certain things in a different way in regards to not bamboozling yourself into whether you're buying or selling. You can sell into a level, like for example, like I said here, if we look here, this candle here closed here because it's a green candle. It closed here. Anything below that level, and it's an outside candle where it closed, anything below that level would be a good entry for the buy. Okay, so let's drop our time frame down all the way down to 15 minutes, 5 minutes. We're not only using this. I do not want anybody to be thinking, yeah, just use that. If, Jay said once it's there, we've got open. Now we still have to use that in conjunction with other things that's going on. Okay, so this here is, I should have confirmed what day that was. I think it's Thursday. This was Wednesday. All right, so now we want to go drop our time frame down to, say, for example, 15 minutes. This is back testing. That's why it's a bit fiddly. I'm going backwards and forwards. And now we start clicking forward. We want to get into Thursday. All right, we want to get into Thursday. So this is Thursday Asian session. We're sleeping. All right, we're sleeping. I'd like to delete some of the other stuff out of this chart so it's not confusing nobody at home. So let's get rid of that. Let's get rid of this. Let's get rid of this. Let's get rid of these lines. We can see this is the previous close. Anything below here is good. Only thing we haven't done is put in our target. Okay, let's quickly go back to here. And we can put this line over here on the top of that high as a potential first TP or target that we can have a look at. So I'm going to make that just blue, and I'm going to type in here as, you know, POI target. Okay, over there. We make the text blue also. All right, cool. Anything below this yellow line would be a good entry for us. Let's drop our time frame down to 15 minutes. Well, now we're sleeping here. This is us asleep. Okay, and here the market, actually, we've seen that the market came and pushed down. No, sorry, that's not right. Wednesday. Trying to get to Thursday. So Thursday's here. This is Asian session. Yeah, sorry. All right, it's the Asian session. Yeah, let's play it forward and see what happens. So we've seen this market. Oops, daisy. We've seen this market from this Asian session here push straight past some liquidity highs. Now, I don't like to see soft. This is Asian session here. Sorry, we're sleeping. Sorry, let's make it realistic. We're not awake here. We're sleeping. This is 4 or 5 o'clock in the morning. All right. Let's click it forward a little bit slower. So what I don't want to do is do things in like just magic. We want to put it realistically. We're still sleeping here. This is Asian session. We're waking up. Frankfurt is kicking off here. Now, what we would do is we'd wake up in the morning. We would mark up some liquidity levels here. This is the level of liquidity over here. This is the level of liquidity over here. Now, all liquidity levels are not made equal. Yeah, just because there is liquidity, I'm saying this is a session low. Doesn't mean it's a fantastic level of liquidity, but we'll go into that. That's for something else. That's another bit of source that we need to understand. All right, so look, we're looking here and we've woken up now. We understand what's happened. Are we going to get the opportunity to get an entry below this yellow line? Yeah, or is this market already, you know, tapped in from earlier from here and pushed down a little bit below this yellow line and is ready to go? What we should have done is on our daily time frame marked up any type of imbalance that existed, and that imbalance that existed is in between this wick and ultimately, and we can see that in this instance this candle you know, opened a little bit down here. All right, but let's drop our time frame down to 15 minutes. All right, in this area. Okay, let's play it forwards, see what happens. Let's play things forward and see what happens. All right, you see the market pushing down here. Now liquidity hasn't been taken yet. All right, look, it's Asian. This is real life. This isn't us making up. Asian session, liquidity above, liquidity below. We've marked out this little area of interest, which is slightly below the previous close. Yeah. Now this might mean that maybe this market's going to play silly buggers and doesn't take this liquidity. Yeah. Maybe it comes into this level over here, which I can see. Can anybody see what this might look like? Does this look like anything? This little area of interest that maybe just wants to tap into here, tap into some imbalance in these candles, and who knows? Either way, we understand that we'd like to get in here for the buy. Let's play it forward candle by candle. Oh, we're right in that level right now. Yeah, where we came in and we said anything below this level, and we've closed a little bit of imbalance that was in this level in here, and we're watching it. All right, now liquidity hasn't been taken, which is one of our prerequisites. Okay, there has been liquidity taken from these little levels in here. Yes, there's liquidity below all of these swing lows on smaller time frame. We like to see session liquidity taken, but who knows? Maybe it gets taken, maybe it doesn't. I'm gonna drop my time frame down, make this more interesting. On a 5-minute time frame, we're in here. We haven't taken session high from Asian session. We haven't taken session low from the Asian session, but we are lower than the open of the previous candle, and we have closed this small imbalance. To see what happens, I'm playing it forwards. I'm gonna click play, see what happens. Delicious. So we've come down here and we've taken this liquidity below Asian session low, though a bit soft. It's a bit softy for me. I like to see a nice big snatch of it, but either way I'm going to trade what I see. Yeah, so I can see the markets come down here. I can see some kind of ugly manipulation W's. Let's drop our time frame down, see if we can get it any prettier. Let's go all the way down to our 1 minute, see if we can see anything any prettier. I don't like the way this wick has taken this liquidity there. It's not great, all right? But I'm looking, can I see anything? On a 1 minute, I can't see no clean manipulation patterns. Not here anyway, not at this low. Yeah, maybe something's happening over here. Let's go to our 2 minute and see. I can see one on a 2 minute. It's right here. Boom, 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 boom. And potentially then I'm interested in anything that comes back into the middle of that W in and around here. All right, I'm going to make it green. And I'm also going to understand that if I was to take that trade, my stop would have to be below the swing low to be safe. All right, or I could take it indication, correction, continuation. All right, so maybe if we're trading what we see, that little wick in here into the middle of that area here. Let me show you the arrow of what I'm talking about. I know there's a slight delay on the zoom. Here, that red candle, that wick in there could have been an entry. If we didn't want to take the entry of it tapping in, we could have taken an indication, correction, continuation play, and therefore this candle close here may have been an entry. Now, I don't know whether that market is going to come down and take us out. I don't know. All right, so that's an indication, correction, continuation play would have been there. All right, or tapping into our zone would have been here with our stop below the lows over here. I am a bit concerned of how it took this liquidity, this little wick here. I'm not over the moon about it. But either way, I may have taken this trade and just been a little bit more conservative on my stop. Where is the potential target? At least there. Yeah, at least there. Okay, let's hit play, see what happens. Oh, delicious. Yeah. Now this one blasts through our potential point of interest differently. And if you was in this trade, you'd still be in this trade. I'll tell you why. Because the market hasn't. Why would you still be in this trade? Can somebody tell me why, from a candle perspective, if you was watching this diligently on the 1 minute time frame, why could you still potentially be in this trade now for a 1 to 7, or well, it got to a 1 to 8. Why would you still potentially be in this trade? Just based upon 1 minute candles market structure. Think about it. When do we want to get into a trade if we're taking a reversal? What are we looking for? What are we looking for the market to do? If it's going up and up and up, making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows, how would we get in for the sell? What could we do?
Wait for liquidity to be taken.
That's one. That's that. I'll give you that one. All right. So maybe here we could be identifying where there was some more previous liquidity.
You wait for a change of character.
We're waiting for a change of character, yo. We're waiting for to see the market indicate, correct, and continue in a different direction. If you took that trade, of course you'd be risk-free. Of course you would have even banked some profits, taking 50% of the table. Yeah. But ultimately, even on a 1 minute time frame, this market hasn't given me any reason to get out. Look, we was in it from all the way down here. This market has only been pushing in. It's given me no indication, correction, continuation against me. There's no clean indication. Move this out of the way. There is no clean indication, correction, and continuation here. Yeah, the market does go a little bit sideways in here whilst it's thinking about it. But there's no clear indication, closing below some structure, correction, and continuing. Nowhere. Then boom, and then have a look here. Higher high, higher low, higher high, higher low, higher high, higher. This market ain't telling me it's ready to stop, yeah? So if I wanted to, I could be in this trade, and if I wanted to, and I was so happy with my want, I could move my stop up. If I wanted to, I could say, you know what, boom. Jay, I've moved my stop up, bro. I know what you're saying, that there's no real indication, but I'm so happy with my profits. My stop's just below this little bit of structure over here. I wouldn't knock you, because by now you should have taken 50% off the table anyway at a 1 to 3. So when this market got to here, 1 to 3, you should have been taking 50% of your position off the table and making this trade risk-free. So you could either say, no, Jay, I'm waiting to get to my 1 to 10. Or you could say, Jay, it's such big money, or my account was so down, I don't want to give away anything for the market, so I'm moving my stop up manually behind some structure, and in this instance it would have to be 1 minute structure. Let's see what happens and play it forward some more. All right, now we have had an indication now. Oh no, we haven't really. Let me tell you why. Because this is the last low over here. Structurally it's ugly, but you have to see it. This is the last little low before the highest point. So the market's still within there. Now you might be shook. I might be like, look, I'm taking my money. I got to a 1 to 8. I'm happy. Yeah. Or you may be waiting for an indication correction below this level, which is going to mean it's going to reduce your profits. Because if you do get an indication correction continuation, you're not going to be at 1 to 8. You may be down here at a 1 to 5, 1 to 6. That's your choice. You want to stay in there for your 1 to 10 or not. All right. Let's see what happens. Doesn't break that. Oh, doesn't break that structure. Yeah. Doesn't break that structure of the last low, even though it's small, before the highest point. And look at us now. Woo. We're moving. Yeah, we are moving. That is nearly a 1 to 8 trade so far. Let's see. Let's hit play. Oh, we are moving. We are still moving. This is a 1 to 10 trade. At this point in time, if you decided to call it quits, you can move your stop loss all the way up the arse here like this and just say, Jay, that's my 1 to 10. If it stops me out here, who cares? All right. If it keeps going, even better.
And the main thing, Jay, yeah, you see, like with this trade that you're riding right now, you said you're looking out for indication, like the ICCs in the opposite direction, or like major breaks of structure, innit? Otherwise, we're just still in it.
Yeah, look, this is a great question that you just asked. Yeah, let me mute this. I don't want to hear no background music.
But that's what I'm struggling with. Is that every time I'm in a trade, I'll be in blue, and then like my brain just starts like I just want to take my money. I see retracements. I start getting a bit shook. It's like
I'm glad you're speaking about this because this is something that we all suffer with. Now, let me explain to you what you need to do. You need to first and foremost identify where there is liquidity on the other level, on to your left. Because we understand when the market takes major liquidity, it runs in the opposite direction. You don't want to be up $1,000 and the market run back to $100 only to keep that. You don't want to do that. You're up. Yeah, you are up. And the aim of this game is to take money at the markets. Hence the reason why I said to you, when you get to a 1 to 3, you make it risk free and you take off 50%. What does that mean? That means if you've got 20 lots in NAS, when you get to 1 to 3, you're going to modify your position by double clicking your MT5, the price. Yeah. Double clicking the price, and then you're going to change 20 to 10 in your lot size, meaning that you're taking 50% off, you're banking that, and then you're going to make it risk free. Now, if you do that, the anxiety is gone with the trade because you've already taken off 50%. If I was up $2,000, I've just put away $1,000, and now I've just got a moon bag in there just to go to a destination. But that moon bag's not going to go forever and ever and ever, and you're going to come back to it a month later and you're in your 20 million quid up. All right. So therefore, you must be able to look left. Look at this. If I go in here, I'm going to my 50-minute time frame. Look left and start identifying some points of interest. A point of interest right here, before we get up to these liquidity levels, is also going to be here at the low of the London session, because that's going to be a previous battlefield that this market couldn't break, and then broke through it with strength. So I'm looking at these levels because if I'm up, the money is in your pocket to be taken. You don't want to be so stubborn that you're like, yeah, I'm at 1 to 9, but I'm going to let this come all the way back, all the way down here to a 1 to... It also depends on where you are with your account. If your account's looking mad and your prop firm challenge, you got 100k account, you're at 92 grand, you've been taking some else. You want to bank some money, yo. Like you want to start building back up. You've already got taken 50% off, and now the market's gone all the way up here. And look, right now, watch. Look at this market. Look where we had a reaction. What a coinky dink. Nothing but green, nothing but green, nothing but green. All of a sudden, we had a reaction at where? Our previous battlefield. Now, if I drop to my 1 minute time frame, I'm looking for an excuse to take my money. Do you get what I'm saying? The money is there. I'm $2,000 up. I'm looking for an excuse to say, thank you very much, mate. I'm going to take that now. Yeah, that excuse is going to be a break in structure, indication, correction, continuation, or the market taking liquidity and me seeing a reaction, a manipulation, M turning up. Yeah. So if I'm here looking at this, look, have a look at where we've just tapped into our previous battlefield. All of a sudden, I'm seeing something here that I don't really like to see, because I don't really want to see this going brrr, coming down here and making my 2,000, 1,500, 1,200, 1,000. I don't want to. The aim of the game is for me to take money. Aim of the game isn't for me to be able to, I've stayed in the trade for 4 hours and it's just kept going up. And I know our psychology makes us do that. Makes us think, I'm in a sick trade, but I don't want to close it now because it might keep going up. But at the same time, there's money. Should I take the money? I get it.
Literally, that's literally it.
I get it. Do you understand what I'm saying? Because I suffer from it as well. Everyone was going to do. Because you're like, you finally got a trade, and it's like you want to scrape, when mommy makes the rice, and you want to go in the pot and take everything off the bottom of the pot.
You're very full, but you're hungry.
Exactly. Now, this is the problem. You see, when you enter into a trade, you have to understand where you're getting out of a trade and where you're taking your money. Now, we've already identified that we're taking 50% off at 1 to 3. That should give you a level of peace. That you've taken 50% off in your pocket and you've made the trade risk-free. You can't lose. Now you're up. Now, the next thing is at 1 to 10, bro, just kiss the Lord and say, I had a good day trading. But prior to getting to a 1 to 10, because that's subjective, your 1 to 10 of where you draw your long position, whatever it may be, you're looking for those points of interest. Now, a point of interest we've just hit is a previous battlefield, and all of a sudden I'm starting to see something looks like a manipulation M. Let's go a candle forward again. Oh, hell no. Hell no. This is a manipulation M. Now, there's two scenarios. I either see this turn up and just close out here at the bottom, or I try and play clever, knowing that this market is going to push back up in here. So maybe it gives me a little bit more profits before I close out my position. Now, this is just an indication. Let me let you know for free. This is just an indication. This isn't a correction and a continuation yet. But if I'm looking for an excuse to take my money, well, we was running up here with no issues. Brrr. As soon as we went into a previous battlefield, I'm seeing a big manipulation end with displacement. I mean, it's enough of an excuse for me to take my money. Now, I didn't get a 1 to 8, but at least I'm in here and I got my 1 to 7, yeah? Or 1 to 7.5. Now, and let me tell you something for free. This market could just blast past this M, because this is only a previous battlefield. So if you've got balls of steel, or if you're a lady, you're just got, a heart of steel, and you're able to stay in this trade, by all means, this market might do this and just say, actually, Jay, we're still going. And you would still have stopped yourself out for a 1 to 7, and next thing you know, you see up here for 1 to 15. It is what it is. Who gives a damn? It's not a bad problem to have, how much money that you're taking. Yeah? If you don't have the heart for it, because maybe your account's at 92 grand when it's supposed to be at 100, then you just take your money down here and say, I don't care, bro, I'm banking that money. And if you do have the heart for it, you're already up. Your account's 105K, and you're like, bro, I'm on fire. I'm not getting out of this trade until I get an indication, correction, and a continuation. So I'm still in. Let's see what happens. Let's play it forward with the candles. Let's see. I'm going to press play. Well, look. Look. Yeah? So man with heart of steel stayed in that play now, and have a look. This is moving very slow. Stayed in that play, and now is at a 1 to 12 trade. Yeah? Because now I'm looking at it and I'm thinking to myself, where are those targets of liquidity? Are these markets going for these levels over here? Now, you might then squeeze up. If you want, you can still squeeze up your stop. Say, listen, boom, I'm squeezing up my stop, yes. I'm squeezing up to structure, wherever that structure may be. Because you don't want that market some news. Remember, and one thing, let me tell you something for free. This is a really big gem, all right? Make sure if you're in a profitable trade that you go and look to see that there is no news coming up. Yeah? Make sure you go and look in your economic calendar and check to see that at, whatever time here, coming over here, 4 o'clock, there isn't some mad news coming up. Because let me tell you, so that mad news might go all the way down here. Do you get it? So at that point, you really want to be your stop loss to be quite close, because you don't. Yes, the news could go in the opposite direction. Yes, but you don't want to be 2.5 grand up and get stopped out for nothing. Yeah, even though you took in a 50%, it's still going to sting a bit that you took a 50% and then that trade still went up to 2.5K, and somehow you let it go run all the way back to $100. You're still going to feel like a mug. Yeah, let's see what happens. Jeez. Still going. Yeah? Still going. So the reason why you'd still be in this trade potentially if you had a heart of steel is because you're thinking to yourself that maybe from New York session here, the market is chasing what? This is my red line. The liquidity. So maybe you might still be in there. But me personally, if I'm in this trade now and I'm at a 1 to 15 trade, I'm going to be moving my stop loss up behind structure. For example, if I was putting in some dots, so to show you what that structure is, every time I see some structure, I'm going to be moving my stop loss below that structure. I don't care. I don't care about squeezing out another little one. I'm going to be moving it below structure. So maybe this one isn't a great one here. Or maybe it is. Who cares? Let's look for the wicks as well. Yeah. Maybe right now I get stopped out. Maybe right now I get stopped out at a 1 to 14, 15 trade. And let me tell you something. I'm feeling good, mate. I'm not feeling like, oh, I could have stayed in there longer. I'm feeling over the moon. Let's see what happens. After here, we've seen it push past this little bit of structure. Just here and stop JJ out. Let's see what happens. Bearing in mind now, this is all 6:30 in the evening. It's going into evening session. Well, we did get a bit more of a push, and I may be looking at it thinking to myself, right, that was a tremendous trade. And if I was still in it, I would have got a little bit more profits. But now look, this market's going sideways. Big arguments happening right now. Big arguments happening in New York session around 6:30. Yeah. If I was still in this trade, which I wouldn't be because I just got stopped out, I'd be thinking to myself, right, anything could happen right now. There's liquidity building up either side of this consolidation. Let's go. I'm looking at this liquidity over here. Is the market going to take it or not? Psh. This is New York session going all the way to evening now. At this point in time, guys, it's evening now. You've been in this trade all day. Come out the trade, man. The market's fraffing about. Who cares if it pushes up there? Yeah. But the point I'm making to you, trade management is very, very important. Yeah. And I like the question that you asked because it's a question that all of us we're going to fight with. We're going to fight with when we get into a good trade. When do we get out? What are we doing? Check to see if there's news coming out. Take 50% at 1 to 3. 1 to 10 is a tremendous achievement. So if you get to 1 to 10, squeeze your stop loss up or just close yourself out. If you don't want to squeeze your stop loss, you ain't got time for that. Just stop yourself out at 1 to 10. Say, yeah, I took a 1 to 10 trade. Took off 50% out at 1 to 3. Then it continued running for another 7R and I closed my trade. Alternatively, you can monitor this trade and look to see where is this market reaching for. That gives you a target, but also you still have to understand that you're in good profits. You don't want to give anything back. So if the market comes back below structure, yeah, like we can see here right now, this market's made these equal kind of lows over here, structure, then you're going to be out. Yeah, you don't want the market, like just think about it. If I put 5K or a grand on the table, what would you do? If I said, bro, look, here we go, let's play snap. And put down the grand on the table. Before I said the words go, you would have taken the grand and put it in your pocket. You're going to be out here fraffing about. If I put down £1, you might listen to the rules. Like, okay, yeah, what do I have to do for this pound? Blah, blah. But if I put down the grand and said, listen, if you can get this grand, you ain't even listening, you're waiting for the rest of the rules. The grand's yours. So it's the same. If you're in this trade and you're in some good profits, 1 to 7, 1 to 8, 1 to 9, listen. After you squeeze your stop up there and it stops you out for 1 to 7, you can take another trade. That's not the only trade you can take forever and ever. Amen. But let me tell you something. If you leave your stop and you don't know nothing, and then this market starts kicking back to you and you start thinking, no, it's going to turn around. It's going to turn around. It's breaking structure against you. And then you go from being $1,000 up to it stopping you out for 0. You feel like a mug. I'm telling you. You feel stupid. You're like, oh my God. This trade was $1,500 up and it just stopped me out for $100. You must look left to see where liquidity is or previous battlefields are where we might see reactions. And you must understand when you have won. When you go to work, you're going to go to work for how many hours a day? Is it 1,500 that you're going to be making from the day? If it's not 1,500 you're going to be making for the day, I beg you humble yourself and understand when you've won. I beg you be like, I'm not going to lie to you, bro. That's a $500 right there. If I can keep doing $500, $500 in 1 week, that's $2,500 in a 5-day week. In a month, that's 10K. Are you doing 10? Go on.
No, I said true.
Yeah. A $500 a day is at 10K a month in a 5-day week. Now, of course, you might take some L's, but the point I'm making to you is that just know when you have won. Like, I have this problem, so I'm talking out loud. Sometimes I'm there in a trade 3.5K up, and I'm looking at it like, blah, blah, blah. If maybe I only risk $300 on the trade, and we're 3.5K up. That's like a 1 to 11, 1 to 12 trade. At that point in time, why don't I just close it out? Why don't I just move my stop loss straight up? Why am I saying nah, but the market might reach for this liquidity over there? And why am I letting that trade kick back against me for $600? That's $600 that could have been in my pocket. And I'm saying to you, it is something concept. It's about having clear rules before you enter a trade of where you're getting in, where you're taking partials, where you're getting out. And getting out can look like you squeezing your stop to that level or closing it. And at least you're going to close it and say, Jay, had a great trade today. I'm back again tomorrow. Another gem, guys, is this. If you've had a great trade, go for a walk afterwards, man. Like, when I say go for a walk, just go downstairs, make yourself a drink, like enjoy your win for a little bit. Because there is a tendency that after you've taken a great trade, you now think you're LeBron James of trading or Steph Curry of trading. And everything you touch is going to turn to gold. You take another trade, boom. You might even push up your lot size because you're feeling wicked and bad, which you should not do. Yeah? But you're feeling like you are John Wick of the trading world. And what will happen is that $1,000 you just made, you will give back a 200, give back another 200. Oh, wait, your lot size was slightly wrong on that one. It wasn't 200, it was 350. Oh, I'll take one more trade, man, because you're looking at your profits and you can remember being up $1,000 and now you're down 650. Oh, you're trying to get back to that grand, trying to chase it. You take another trade. Before you know it, you've given back the money you just made. I'm telling you. I'm telling you because I have done it.
Furthermore, you give back your money and now you're in loss.
And you're taking it. Oh, and 15 minutes ago, you was up $1,500. So understand that, this game is rigged. You get what I'm saying? Like, it's not here to help you. It's here to mess with your psychology. It's here to make you have a false sense of security. So if you do get a win, if you do get 5 numbers plus the bonus, cash it in, and enjoy it. Go have a little holiday. Go have a little trip. Go sit down and say to myself, that's a positive day for today. All right. The next thing I want to put in here, guys, is something that you guys don't do. I'm going to finish up on this. I'm going to go more about it tomorrow because we have run on a bit. Is you have to journal. Yeah. You have to monitor your trades and understand what you've been doing. Now, here's a journal that I can send you guys to have access to, where you can put in your pair, put in your entry time, your date. You have to know. Now, there's a other way you can do this, which you can pull a report from your trading view, but that's after the fact. That's not journaling as you go along. That's you seeing, reviewing what you've done after a month. See, the reason why is this. Now this is a journal, but we can change this. You can make your own. Anyone who's good at Excel, you can make your own. You can go in here and the first one could be inside or outside pair. Yes or no. Bullish or bearish. You can put in it because after a while you're going to see that every time you take an outside pair and you take it in the direction of what the outside pair is, that's a profitable trade. Every time you go against it, it's negative. You lose. Now, if you see that over the month, you're going to go, wait a minute. Maybe I should stop taking them when they're not inside or outside, when they're not outside or bearish or bullish. Maybe I should stop taking bearish ones because for whatever reason, I just always lose on the bearish ones. Maybe for me personally, when I get an outside daily candle bullish and I take it anything below that the open and I make sure that the liquidity is there, and I say, like, you could have in there manipulation W, clean manipulation W, yes or no. Stop loss within a certain, yes or no. This is information for your trading. I'm going to build one out for our confluences because this is a journal, but it's not necessarily relevant to our strategies. I'll build one out and I'll share it, but you can do one yourself. Yeah, you can do one that does calculations and calculates things for yourself, for you if you want. This one does that, calculates stuff for you and gives you numbers. But the point I'm making to you is you have to monitor your results. If you don't monitor your results, you don't know what you're doing. You can only remember your last couple trades. Whereas when you see the data, you're going to go, bro, anytime I take GU trade is profitable. But anytime I take gold, You know what I'm going to say to you? If your data says that to you, know what I'm going to say to you, Jivan? I'm going to say, stop taking gold and just take GU. That's what I'm going to say to you. Simple.
The watch list.
Yeah, simple. But you're going to say, bro, every time I take a trade, you can put in here, what was your entry? 1 minute, 5 minutes. You can say, bro, every time I take a 1 minute entry, I get stopped up. You can put in here another field. Was my stop below the low or was it below the last low? A more aggressive entry. If every time you take an aggressive entry, you get stopped out, stop doing it. Put it below the swing low. You can have in here, did you take partials at 1 to 3? If it's no, and that trade was negative, start taking partials at 1 to 3, bro. If you can see that most of your trades, you can even have another column in here. I'm going to fill it out. I'm going to do one for you guys. That only run, most of the trades you take only run for 1 to 6. Only go to 1 to 6 before they turn around and start going completely negative. That would mean that, bro, when you get to 1 to 6, that might be the end of your road. Because you've taken 100 trades and it's shown you that over time, the trades that you keep taking only run for a 1 to 6. There's no point sitting in there waiting for a 1 to 10 trade if you've taken 100 trades and they normally turn around at 1 to 6. Because the markets have changed, or because the market that you trade don't run for a 1 to 10 that Jay says, 1 to 10 you should wait for. Maybe the markets that you trade only ever keep running for about a 1 to 5, 1 to 6. So therefore, that's your answer. But if you do not capture this information, you won't know. And this seems like the boring part of trading, yeah. But if you want, let me tell you what the most exciting part of trading is, when it's making you money. Yeah. So if you can't do the boring bits on the basis that you can get to the exciting bits of it making you money, then that's on you, bro. I fear business that. It's nothing to do with me. Yeah? Guys, amazing day. I hope that we've touched on a few things in regards to how you can use your trading view to quickly blast through trades and mark up outside stuff. I hope we've looked at, having a bias, whether that is going to be buying into the imbalance to only, selling into the imbalance to only buy, or buying into the imbalance to only sell. And I hope we've looked at seeing where a potential target is. Obviously, the high of the previous candle is a potential point of interest. Obviously, if you blast through there, fantastic. But if you don't, that could be your target for the day, which is just a 1 to 2, and you're happy. Yeah. If you don't see certain things, for example, right now, which I was trying to show you guys, this is how I'm going to end. I was trying to show you guys that right now, every single one of these pairs, look if I go through my wise men, I'm going to zoom in so you can see where I'm going. Every single one of these pairs right now, I think bar maybe 1, maybe not even bar 1. I think maybe I even made a mistake on that. None of them are an outside candle. None of them are giving us any bias on a daily time. Look, have a look. This is Euro AED. Previous candle here, was that outside candle outside of this wick here? No. Euro GBP. Previous candle here, was this outside of the previous range? No. UNZD. Previous candle, was it outside of any range? No. Because this is a green candle. For what reason it started here and closed up here? No. GBP NZD. Was the last candle previous this candle here? Was it outside the range of this candle here? No. None of them. You know why? So the market's just saying, yo, today's going to be a madness and we don't know what's going on. So we're chilling. Every single pair, not one of them was going to give you an outside candle at the moment. I went through all of them this morning. Not one. Because of this bad boy. Presidential elections. Where's your money on? Let's go. Who's winning the elections?
I'm thinking Trump, man. I ain't gonna lie. I think Trump's gonna get it.
Yeah, who says Trump? I think maybe I'm gonna go with Trump as well. Maybe.
Just based on his clout and that, man. I just think like his campaign, he's getting all the celebrities, all the like.
Who's that? Trump.
Yeah, like he's got Joe Rogan, the US Dana White.
But it's a bit balanced, you get me? Because they had Beyonce, as he was saying. They had Beyonce. Yeah. So it's obviously, I think when they start just drawing for rappers and Sexy Red and all them kind of random people, that's like you're reaching, bro.
Yeah, it's desperate times for them, man.
Yeah, you're reaching, bro. You're making it like a concert, a rave, bro. It's not a rave, bro. Like Sexy Red ain't gonna help nothing to do with the running of the country, bro. Yeah.
If Trump does win, you know America's crazy, but you know America likes strength. They like strong characters,
That's what I'm
and
saying.
Trump is that.
Yeah, I think I heard one. You know what? Guy say something the other day. Let me close up this session anyway.